This is Alan Bush with Archer Financial Services. We have stock index futures trading higher in the overnight trade. It's mainly due to better than expected corporate earnings reports. However, we did see some pressure developing after several U.S. economic reports came in on the weak side. We had jobless claims showing an increase, coming in higher than expected. We had the existing home sales report also coming in weaker than the median estimates. And in addition, we had the Philadelphia Fed Index coming in worse. And yet stock index futures still trading higher on the day, although that market did give back some of the earlier gains. We continue to believe that the market will be underpinned by an easing of interest rate policies from the Federal Reserve sooner or later. However, we do believe that it is more likely that the Fed will be announcing another easing initiative later rather than sooner. In any event, that should be enough to support stock index futures. So from here, I would expect higher prices today, higher prices over the next few months. Over in the currency markets, we did have the euro currency trading higher. Those gains given back, though, now with 2, 5, and 7-year Spanish debt auctions really not coming in that well, with yields increasing across the board, with the 5-year coming in at a record high yield. So we had the existing 10-year Spanish debt advancing to over 7%, and that's a very critical level. So the worries about the deteriorating situation in the Eurozone, taking the euro currency from higher on the day to lower on the day, with a focus now on rising Spanish yields coming into play. We continue to believe that the main trend for the euro currency is lower. This is a long-term trend. We have the Australian dollar and the Canadian a little bit better. Some talk that central banks are diversifying their assets into Australian debt. Also some talk that the Bank of Canada will be raising rates next year. That's supportive to the Canadian dollar. My feeling is that just the opposite will take place. Most likely next year there will be pressure on the Bank of Canada to lower rates, not raise rates, as the consensus view suggests right now. So from here, I'd expect the Australian dollar and the Canadian to underperform. Those two currencies likely to work lower. Credit markets coming back off of earlier lows with those 3 economic reports here in the U.S. coming in on the weak side. I would expect a further recovery in Treasury futures. In fact, there's a good chance we can trade back to the unchanged level on the day. Longer term, the bull market, we feel, remains intact for Treasuries. And I think that we will be challenging contract highs in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.